Well, the Bank of Canada says it will hold its key interest rate at 2.25%. This as data in recent weeks shows the country's economy has largely been stable and in line with the central bank's outlook despite the effect of U.S. tariffs. Now, the rate announcement comes as the economy also faces uncertainty with the future of the scheduled review of the Canada-U.S.-Mexico trade agreement coming up in the summer. Bank of Canada Governor Tiff Macklem has said that the central bank believes inflation is likely to hold at around its target of 2% this year. But if that outlook changes, the bank is prepared to respond. I want to bring in CTV's Scott Hurst with more on this. So lots at play here, Scott. And I think more than anything, when you listen to Tiff Macklem speak and answer questions today, that theme of uncertainty is clearly evident.
Matt, good afternoon. This is the first interest rate announcement from the Bank of Canada for 2026. So really the first chance to set the policy rate, but also our first chance to hear from Bank of Canada Governor Tiff Macklem about the rate, but also about the future projections. And as you mentioned, really a common theme through all of this is a whole lot of uncertainty going forward. But first and foremost, we can focus on the current rate. It is keeping the benchmark interest rate steady at 2.25%. And that was widely anticipated by economists, with the central bank saying that its projections have largely been in line, and keeping this policy rate really remains appropriate based on its outlook. And what we're hearing from economists is that there is really no major compelling reason either way, especially when you take into account inflation, which has stayed in the range of around the 2% inflation mark for the Bank of Canada. So really no compelling reason either way to go higher or lower. But as you mentioned, a whole lot of uncertainty going forward for the Bank of Canada, looking at our ongoing relationship, the trading relationship, particularly with the United States. Here's more from Bank of Canada Governor Tiff Macklem.
As the Canadian economy continues to adjust to U.S. trade restrictions, we expect the economy to grow modestly and inflation to stay close to our 2% target. However, uncertainty around our forecast is heightened. The range of possible outcomes is wider than usual. U.S. trade policy remains unpredictable, and geopolitical risks are elevated.
So, Matt, because of all that, what else we heard from the Bank of Canada is that timing and direction of the next policy rate is difficult to predict with so much uncertainty and so much upheaval from the trading relationship with the United States. Of course, there are tariffs that are currently in place, and then we also had the threat of potentially more tariffs imposed by the U.S., but he did single in on the Canada-U.S.-Mexico free trade agreement and the renegotiation that is happening later this year, saying there's so much uncertainty around that it is hard to predict exactly the impact it'll have on the Canadian economy and therefore where they might go with the policy rate. So because of all that uncertainty, already many eyes will be turning to the next policy rate, which is coming up in mid-March.
Yeah, still a lot up in the air. We'll see what happens when that rolls around in a couple of months. CTV Scott Hurst live for us this afternoon. Thanks for this, Scott.
Thanks, Matt.